The last topic in the unit number 2, that is insurance. So mutual funds and insurance we comes under the non-banking financial sectors. So now we are going to observe about the what is the concept which is related to insurance. The insurance sector in India has completed all the facets of competition, from being an open competitive market to being nationalized and then getting back to the form of a liberalized market once again. The history of the insurance sector in India reveals that it has witnessed a complete dynamism for the past 2 centuries approximately. With the establishment of the Oriental Life Insurance Company in Kolkata, the business of Indian life insurance started in the year 1818. What is the present scenario? There are currently 57 insurance companies in India. In that, 46 are from private sector. In that, 24 comes under the life insurance and 33 non-life insurance companies in India. The major names in the sector are LIC, HDFC, ICICI, Tata AIG. Coming to the in the non-life again, ICICI, HDFC, SBA General Insurance, and four government insurance companies also there. So, what are the different type of important milestones in India life insurance business? So, in the year 1912, the Indian Life Assurance Companies Act came into force for regulating the life insurance business. That is, it is the first insurance act. 1928, the Indian Assurance Companies Act was enacted for enabling the government to collect statistical information on both life and non-life insurance business. 1938, the earlier legislation consolidated the Insurance Act with the aim of safeguarding the interest of insuring public. In the year 1956, 245 Indian and foreign insurers and provident societies were taken over by the central government and they got nationalized. So LIC, Life Insurance Corporation, was formed by an act of parliament, that is LIC Act 1956. It started off with a capital of rupees 5 crore and that too from the government of India. The history of general insurance business in India can be traced back to Triton Insurance Company Limited. It is the first general insurance company which was formed in the year 1950 in Kolkata by the British. So, what are the recent insurance sector reforms? In the year 1993, Malhotra Committee, headed by former Finance Secretary and RBI Governor Anand Malhotra, was formed to evaluate the Indian insurance industry. That means before that, there is only government companies are there in insurance sector. The Malhotra Committee was set up with the objective of completing the reforms initiated in the financial sector. The reforms were aimed at creating a more efficient and competitive financial system which suitable for the requirements of the economy. Keeping in mind the structural changes currently underway and recognizing that insurance is an important part of the overall financial system, where it was necessary to address the need for similar reforms. So, in the year 1984, the company submitted the report and some of the key recommendations also there. In that, the first one is the structure. Government stake in the insurance companies to be brought down to 50% only. So it goes to privatization or liberalization or open to market conditions. Government should take over the holdings of GAC, General Insurance Corporation, and its subsidiaries so that these subsidiaries can act as independent corporations. All the insurance companies should be given greater freedom to operate. Second one, competition. So these are the recommendation, key recommendations which is given by the R.S. Malhotra Committee in the year 1994. Competition. Private companies with a minimum paid-up capital of rupees 1 billion should be allowed to enter the industry. So it is going to increase the competition. Whenever there is increase the competition, so the customer can ultimately benefit to provide the better services and products by the companies to face the competition. No company should deal in both life and general insurance through a single entity. So there must be a separate insurance company segment. So take the example, SBI Life Insurance Company is there. At the same time, SBI General Insurance Company also there. Foreign companies may be allowed to enter the industry in collaboration with the domestic companies. Tata AG. Tata is an Indian company, AAG is a foreign company. Even if you observe SBI Life Insurance, it is a private company. Most of the people think like that SBI means government, but actually it is a private company which consists of 74% of stake belongs to SBI and 26% of share or stake belongs to PNB per month. Transfer. Postal life insurance should be allowed to operate in the rural market. Only one state level life insurance company should be allowed to operate in each state. Regulatory bodies. The Insurance Act should be changed. So Insurance Act 1938 have to change it. Why? Because almost 70 years completed, 30 years going on. An insurance regulatory body should be set up. Controller of insurance, now as a part of the financial ministry, should be made independent. And fourth recommendation is the investments. Mandatory investments of LIC, life fund and government securities, to be reduced from 75% to 50%. GAC and its subsidiaries are not to hold more than 5% in any company. The last one is the customer service. LIC should pay interest on delays in payments beyond 30 days. Insurance companies must be encouraged to set up unit-linked pension plans. Computerization of operations and updating of technology to be carried out in the insurance industry. The committee emphasized that in order to improve the customer services and increase the coverage of insurance industry should be opened up to competition. Now you can take the online policies also. That means you can take the insurance policy through online mode also. So what are the important milestones in the Indian general insurance business? In the previous slide, we observed the life insurance, and now we can understand or we can observe what is the important milestones in the general insurance. In the year 1907, the Indian Mercantile Insurance Limited was set up, which was the first company of its type to transact all general insurance business. In the year 1957, General Insurance Council and all of the Insurance Association of India framed a code of conduct for guaranteeing fair conduct and sound business patterns. In the year 1968, the Insurance Act improved for regulating investments and set minimal solvency levels, and the Tariff Advisory Committee also set up. In the year 1972, the General Insurance Business Nationalization Act 72 nationalizes the general insurance business in India. It was with effect from the 1st January 1973. So at that time there is a 107 insurance integrated and grouped into four companies. First one is a National Insurance Company Limited, the New India Insurance Company Limited, Oriental Insurance Company Limited, and United India Insurance Company Limited. And GSC was incorporated as a company, and these four as the subsidiary companies of GSC. What is the present position of the insurance companies in India? IRDA, Insurance Regulatory and Development Authority, has so far granted registration to the 12 private life insurance companies and 9 general insurance companies. If the existing private sector insurance companies are included, there are currently 13 insurance companies in the life and 13 companies operating in the general insurance business. What are the basic functions of the insurance? So we can classify the basic functions of insurance into the three functions. First one is the primary function, second one is the secondary function, and third one is all remaining functions that we call as the other functions. So what are the primary functions of insurance? So it have to provide the protection, and it will be collective risk bearing, and they have to evaluate the risk and provide the certainty. Secondary functions of insurance is nothing but a preventing the losses, covering large risk with a small capital, helps in the development of larger industries. Other functions of insurance is a savings as well as investment tool, medium of earning foreign exchange, risk-free trade. Insurance provides indemnity or reimbursement. So next one is a General Insurance Corporation of India. It is nationalized in the year 1972, and already we know that there is 107 insurance companies which are included into the Indian and foreign companies, and it is grouped into the four companies. So Indian and foreign insurance companies amalgamated, and these four new companies will be established. So the National Insurance Company Limited, the New India Insurance Company Limited, the Oriental Insurance Company Limited, the New United sorry, the United India Insurance Company Limited. These head offices are located at Kolkata, Bombay, Delhi, and Chennai. See, all the four companies are government companies registered under the Companies Act, and its commerce started commerce business from the 1st January 1973, and the GST was formed for the purpose of superintending, controlling, and carrying on the business of general insurance. So, what are the functions of the GST? The carrying of on of any part of general insurance business as deemed desirable, aiding, assisting, and advising the companies in the matter of setting up of standard of conduct and sound practice in general insurance business and in rendering efficient customer service. Advising the acquiring companies in the matter of controlling the expenses, including the payment of commission and other expenses. Issuing directions to acquiring companies in relation to the conduct of general insurance business. GSA functions under the following major acts. Companies Act 1956. Why? Because these are all four companies registered under this act. So the Insurance Act by general, and the General Insurance Business Nationalization Act 1972. All 107 Indian and foreign insurance companies grouped into the four companies. The General Insurance Business Nationalization Amendment Act 2002, latest one. The Insurance Regulatory and Development Authority Act 1989. What are the challenges for insurance companies? So they are facing some challenges like that: consolidating the savings, boosting sales and distribution, preparing for mergers and acquisitions, leveraging new opportunities, handling the regulatory reforms. This is the company side. Companies facing the challenges, these five, and these challenges faced by the entire industry. Okay, you can observe challenges for insurance companies. And this one is the Indian insurance industry challenges. Newcomer poses threat. With more companies coming up every day, with the growing demand of the industry, the market's very competitive. Until and unless the existing companies make a mark and create their very own brand name, it will be quite tough to sustain their position in the market. There is also a probability of big companies taking over the new emerging companies. Supplier power. The people providing the capital don't act as big terror, as opportunity always lies in the big hands, and they can any day tempt good insurer from small companies to their own company. Buyer power. Individual never stands a chance in front of big corporate sectors as they dominate the insurance industries with higher potential of negotiation power. Presence of substitutes. The insurance industry is full of replacement options and the large insurance companies offer the same service as of others, be it any sector of home, commercial, auto, health, or life. Another topic on the part of the syllabus IRDA, Insurance Regulatory and Development Authority. So the passage of the Insurance Regulatory and Development Authority Act in the year 1999, it was an outcome of the implementation of the recommendations of a high-powered committee which suggested the setting up of a statutory body called Insurance Regulatory Authority in the year 1996. This body was later renamed as Insurance Regulatory and Development Authority with the passage of IRDA Act in the Parliament. What is the mission of the IRDA? To protect the interest of the policyholders, to regulate, promote, and ensure orderly growth of the insurance industry, and for matters connected therewith or incidental thereto. What are the major objectives of IRDA Act? To promote orderly growth of insurance industry in the country, which is including registration of the insurance companies. To administer the provisions of the Insurance Act, to protect interest of policyholders and investors, to devise control activities needed for smooth functioning of the insurance companies, including investment of funds and the solvency requirements to be maintained by insurance companies, to lay down the accounting methodology to be adopted, to adjudicate on disputes. What are the major functions of IRDA? These are the objectives and these are the functions. As defined by the IRDA Act 1999, IRDA performs the following broad functions. Ensure orderly growth of insurance industry, protect interest of policyholders, issue consumer protection guidelines to insurance companies, grant, modify, and suspend license for insurance companies, lay down procedures for accounting policies to be adopted by the insurance companies, inspect and audit of insurance companies and other related agencies, reinsurance limit monitoring, vetting of accounting standards, transparency requirements in reporting, ensure the health of the industry by preventing sickness through appropriate action, publish information about the industry, prescribe qualification and training needs of agents, monitor the charges for various services by insurance companies, and monitor the investments. These are the some of the stipulations as regards which related to settlement of the claims. I- IRDA regulations have laid down the following stipulations as regards of settlement of claim. All the requirements which needed under the death claim are to be sought in one instance. Admit or repudiate the claim in 30 days. All the investigations needed to be completed in 6 months. Interest at 2% over bank's rate is payable in case of delayed settlement. So how the authority will be composed? As per Section 4 of the IRDA Act, which was constituted by the Act of Parliament, specify the composition of authority. The authority is a 10-member team consisting of one chairman, five whole-time members, and four part-time members. These all are appointed by the Government of India. Thank you.